When it comes to taxes, you need to think long term.
You need to think long term because hopefully your retirement is going to span a decade or two. Maybe that is long term. One of the biggest questions that we get for families and individuals who come to us is, how do I save money on taxes?
Yes, everybody wants to save money.
Everybody. You've been paying taxes your whole career, and you're wondering, in retirement now with a finite amount of resources where you have to deliver your lifestyle from the money you've saved, you want to ink every bit out of that money. One way is to decrease taxes. It's top of mind for most retirees and retirees.
And part of thinking long term is not thinking about just filing each year. It's kind of thinking about having tax diversification. And this is where the CPA is like, oh, I want to show everybody how to do this. So some people are really interested in what does tax diversification look like?
Diversification means having these different vehicles and being able to make different decisions as we go through our retirement journey. And if you've done the proper planning, you can have up to 4 different income sources during your retirement. And there's good ways and bad ways that you can use that. And these different sources have tax advantages and tax disadvantages of their own. So let's take a look at the different retirement savings buckets that are available to you. All of us are most familiar with the first one. You think about your pension, your 401k, your IRAs. These are all the traditional types of retirement buckets. They haven't been taxed yet. When you take them out in the future, they're going to be subject to tax. A second retirement income source is Social Security. We talked a lot about Social Security in our prior segment, and Loren talked about how you have different opportunities to be more efficient with your Social Security and pay less in taxes on your Social Security. The third option would be your Roth retirement buckets. You've got your Roth 401ks and your Roth IRAs. We know that these buckets haven't been available to all of us for as long as the traditional buckets. You know, the Roth 401k, Roth IRAs, they are newer than the traditional savings buckets. And then the last bucket is the non-qualified, and that's not an everyday term. So really what the non-qualified means it's a non-IRA type of account or a non-401k type of account. And just like your bank accounts are considered non-qualified accounts, or any brokerage accounts that you might open if it's an individual or joint account. Those are considered non-qualified accounts. With our focus today being on rethinking retirement and trying to have a mindset shift when it comes to taxes, we're really focused on the pre-tax and traditional buckets along with the Roth buckets. We know all of that pre-tax savings that you have as you take those distributions in retirement are going to be subject to ordinary income. So this is going to feel very similar to when you were still in your working years and collecting that paycheck. You're going to be paying federal taxes depending on the state that you live in. You're going to be paying state taxes as well. When we take a look at the Roth buckets that we have, these are at our favorite tax rate. These are completely tax-free. And when I say that tax-free, I really mean when we take those distributions. When we made the contributions into those Roth buckets, that's when we were subject to the taxes. So you did pay tax on those balances, but once we get contributions into the Roth buckets, they are going to have an opportunity to grow in the markets, and that growth is never subject to tax in the future. So you have every balance, every single dollar that you have saved in those buckets are going to be completely tax-free, which really helps mitigate your tax rate risk. So how you save money is to have this proper plan. Let's have really strong tax diversification, which gives us more control on where to take income from, how to take it from in retirement.
And people might be wondering, okay, A, do I have those buckets or how do I get them?
And most of the families and individuals that we work with, they don't know all of that. They don't want to know all of that kind of stuff. That's where the teamwork comes with our partnership, because we take care of that for them. But I can tell you, they don't have to know, but they feel it. They live it. They get to see the results of what control can have from an impact standpoint as far as what they get to spend from what it is that they've saved.